Today we see the market continuing to cool down as the Dow Jones continues to show strength. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today SPY was down 0.26%, and intraday we were breaking down below support at 407 and down below the 5 EMA. But as you can tell from the candle, buyers stepped in and we closed above support yet again. Also pay attention to the volume as we are pulling back on extremely low volume. So I think there's a very good chance we are going to bounce from this support and go back up towards resistance at 411 to 414. Now if we break below 407, we're likely coming down towards 404 and the gap close at 401.6. So you have very well-defined risk right here at SPY 407. Keep in mind, we are in a bull trend and you can tell all of these moving averages are positively sloping and stacked to support the buyers. So there's going to be a ton of support levels for the possibility of a higher low back into another higher high. And there's a very good chance SPY is trying to push back to higher prices. Now, if at any point we see high volume selling, you're going to see it in the volume and the price action breaking below support. So manage your risk right here at SPY 407. And if we start bouncing from here and you're still holding short, keep in mind there is a possibility that SPY is trying to get up here towards this gap close at 421. On the NASDAQ 100 triple Qs, we were down 0.99% today, and the triple Qs did close down below the 5 EMA, but did not fully close the gap at 313.35. Now on the triple Qs, we know the big tech sector has been relatively the strongest, and we are sitting well above the February high. But keep in mind, there's a good chance we could test that February high as support before we push any higher. Now we do have this double top price target at 327, and we do have a gap to fill at 322. But don't be surprised if we need to go a little bit lower before we go any higher. The big tech stocks are still looking very strong and very good. So I'm not expecting to see this market rolling over and dying. I'm simply expecting to see a higher low before the next higher high. Manage your risk on the triple Qs right here between 311 and 312, because if we break below that, we could come down and close the gap at 308. Remember, this is a strong bull trend, which means there's lots of buyers at support, and it means the bears are going to continue to get squeezed once we see buyers showing up and pushing this market higher. Also pay attention to the triple Q's volume is starting to increase, so if we do start to see high volume selling and we lose critical support, you instantly need to get more risk off. On the Dow Jones, we were up 0.26% today on increasing volume from yesterday's pullback, and we are right back within the Bollinger Bands, and we're right back above this critical resistance breakout just below 335. Remember, above this higher high breakout, it's possible we push back into the 340, so the Dow Jones is looking bullish. A rejection from here could take us back down towards 332 and then the gap fill at 329. On the Russell 2000 IWM ETF, we were down 0.98% today after breaking back down below all of the moving averages, and we're getting very close to fully closing the gap down here right around 172. You can see these Bollinger Bands are squeezing, so there's a good chance we do fill that gap before we go any higher. But from there will be limited downside below the support at 170. Breaking support at 170 would be extremely bearish, and we would likely come back down towards 166 to 164. And the next bull breakout is going to be above 177 to 178 for the gap fill at 181. On the ARKK ETF, we were down 3.56% today with the price action breaking back down below all the moving averages on slightly increasing volume, and we do have this triple top rejection from 40.5. It's extremely bearish if we break down below these necklines at 37 and 36, because that validates the double top and the triple top to go fill the gap below 32. We're instantly bullish if we get the bull breakout above 40.5, but not any sooner than price action breaking that high. On the VIX, we were up 0.42% today, and the VIX tried to break out above 20 yet again, and once again got crushed back down to the lows. This is telling us fear is leaving the market, and we continue to see the VIX spending a lot of time below 20, which is more indicative of a bull trend. On Bitcoin, we're currently flat, sitting right below resistance at 28,000, and the Bollinger Bands are getting extremely squeezed right above the rising 20 daily moving average. So this bull trend is starting to look like a bull flag, and there's a good chance if we get the breakout, we're going to push towards 30,000. The breakdown is going to be below 27,000, which would take us back down to 25,000. On Google stock, we were down 0.24% today with the perfect rejection from this resistance zone right around 106, and we're right back down to the rising 5 EMA, and we are still in a bull trend. Google could double top from here, but I don't think it's going to. I think this is a higher low into a higher high that's going to take us to 110 or possibly even higher. Manage your risk right here around support between 100 and 102, with the next bull breakout being above 106. On Amazon stock, we were down 2.74% today with the perfect rejection from that resistance right there at 104, and we're getting very close to closing the gap at 100.42, and we still do have a bull trend. I think there's a good chance we close the gap and then push above 104 to hit our price target just below 109. So manage your risk right here between 98 and 100 and continue to expect higher prices as long as we can hold above this critical support. On Microsoft stock, we were down 0.99% after Microsoft is continuing to show rejection from that resistance at 290, but we are right back down to some support, which is right here, right around 283. Below 283, we close the gap at 281 and then 276. And if we bounce from support, we go back up towards 290, 293, and the gap closed at 296. On Nvidia stock, we were down 2.08% today, so we got the pullback we were looking for, right back down towards the support we were watching, which is 267. We need to break support at 267 to go back down to 258, which is also where the rising 20 daily moving average is. Bounce from any of this support takes us back up to close the gap at 273, and a break of 274 brings us back up towards 280 to 282.5. Now keep in mind this stock is due for a correction, so if we start losing support, we're likely coming back down towards 242. On Tesla stock, we were down 3.67% today, and we're right on top of some very critical support between 183 to about 187. We closed below 187, so it's on 183 to hold up for the bulls. Otherwise, we are likely coming back down towards 173 to 167. Keep in mind, we also have this gap to fill way down here at 146. So if we start breaking down to lower lows, you need to be very cautious if you're trying to stay bullish in Tesla stock. I would personally wait until we can break above 187 and hold that level as support before getting bullish. And currently we are below that level, so you need to be risk off. The bull breakout will be above 187 and then 197. And that means we could start pushing back up towards 208 to 215. On Apple stock, we were down 1.13% today, holding right on top of this support at 163 and got very close to closing the gap at 161. If we bounce from 163, we need to break the high at 166 to reach our next upside price targets at 169 and the gap close at 171. If we lose support at 163, look for the gap fill at 161 and then the gap fill at 158.5, which is also the rising 20 daily moving average. On the financial sector, we were down 0.13% today, holding that support right above the gap fill and the negatively sloping 20 daily moving average. And if we continue to get rejected from 32, we're looking for the gap fills below. The industrial sector was down 1.3% today, continuing lower towards the gap fill at 97, and we are in a bear trend as long as we're below the moving averages. The healthcare sector was up 1.73% today, confirming that bull breakout above 130 and pushing higher towards the resistance at 134. This is all happening on increasing volume. The energy sector was up 1.5% today, bouncing off of that support zone right around 84, and we still have the bull trend developing as long as the price action is above all of the moving averages and this support zone between 83 to 84. So jumping back over to the S&P 500, this is still looking like we are holding support, and we did see a lot of buyers below support, and we're still not seeing high volume selling, but we are dealing with a rejection from an overextended condition at resistance. So you need to manage your risk right here at this critical support. If we bounce from support, you can stay bullish, but if we break below support, you need to instantly start getting more risk off preparing for lower prices. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. You find out how to join the Stocks Channel Discord by clicking on the link below. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.